Stocks plunging in afternoon trading. Well, they've already plunged. 4 o'clock, it was all over. The Wall Street sell-off just continued all week. Major indexes around the world down. Jim Russell, money manager with Ball & Gaynor Investment Counsel, joins us in the studio. I didn't get a chance to look. We were down 500 on the Dow at one point. I don't know. We ended up, what, down 400 and something?
Sounds right, Paula. It's been really a rough couple of days, a rough couple of weeks, maybe even a rough month or two, and there's really a lot of reasons for that.
If you have a 401k plan, you lost money. The 401ks, a lot of them are tied to the S&P 500.
Right.
That is down for the year.
That's correct. We're down approximately 10% on most stocks. Some stocks a little bit more, in fact. So here's the key. Never invest emotionally. Always rebalance. Always know what you own. Stocks have been a little bit volatile. There's a little bit of a global concern about growth in China and in Europe and Japan and of course the United States. We're all linked. So if there's concern about growth in China, there's going to be concern about growth in the United States.
All right, I'm feeling a little emotional though. I gotta tell you.
Totally understand.
All right, okay, here are those closing numbers. Wow, we did go to over 500 on
Right.
the Dow. You know, people don't like to go into a weekend owning stocks, so that probably accelerated things here a bit. But you said there are things to worry about. We have to worry about China. On the other hand, China is not in a recession, and we are not in a recession, right?
Nor do we think we're headed there. So that's a very key point to bring up in today's discussion, and that is we think that economic growth, while it's a little bit on the slow side, we call it 2%, maybe 2.5% at most this year. We are not headed toward a recession, at least in our view, this year or next year. Inflation's low,
right.
Interest rates are low, unemployment's low at 5.3%, wages are on the rise, a little bit slower than most people would like to see, no question about it. But there are pockets of important strength in the United States. Housing is one of those areas. Autos are one of those areas. Both of those actually are huge employers in the Ohio and Cincinnati specific areas. So that's very good news. Home improvements also on the mend. So there are probably some areas in the energy patch, maybe away from Ohio a little bit, that perhaps are a little bit weaker, no question.
And the low oil prices, that means a loss of jobs in areas that really depend on those jobs, but it also means people have more money in their pocket. We are in a situation where gas is up right now because of a refinery
Right.
issue, but we could be looking at $2 gas soon again. Isn't that a net positive?
I think it's a reason for a party, for goodness sakes. I mean, $2 a gallon gasoline is down materially from what we're paying now, and that could be just around the corner. We think probably a couple of weeks out once that refinery outage gets fixed.
Not all bleak. Also, I think this takes the September rate hike off the table for the Fed. Do you agree?
We would agree. And in fact, low gasoline prices, low market interest rates, and a Fed that's probably on hold for September, probably moving in December or perhaps even 2016 is probably the outcome of a lot of this global market volatility. But we would always advise people to never invest emotionally. Agree with your statement. People do not want to hold stocks on Friday. Over the weekend, developments could happen. So we'll have to kind of look into next week to see what happens next. But we do think that stocks are maybe overdue for this type of corrective action, and we're perhaps playing a little bit of catch up here.
I'm going to summarize real quickly some of what we talked about. You think there's still going to be, could be volatility for weeks ahead.
We
but
do
then,
think that.
So don't, on Monday, if it goes down again, get ready to get rid of everything.
That's right.
But volatility ahead, but buy cautiously, hold things cautiously, talk to an expert, don't get rid of your whole 401k.
Always invest cautiously, always invest smart. And again, when the emotions start to ramp up, turn off the radio and perhaps get away from the computer just a little bit.
All right. Thank you for calming us before weekend. We're going to have more at 5:30, and 6.